Good morning and welcome to the Tuesday edition of Business Morning. I'm Laddie Williams. Thank you for joining us.
Good morning. I'm Ini John McQuarrie. Welcome to the show where let's get the latest business news, starting with the plans by the G7 to give attention to Africa. About $80 billion investment is expected in Africa's private sector over the next 5 years to support sustainable economic recovery and growth on the continent. According to a statement by AFDB, the investments will come from the G7 DFIs, the IFC, and other development partners, marking the first time the institutions will come together to make a collective partnership commitment to the African continent. It notes that investments will create jobs, boost economic growth, help tackle climate change, and fight poverty as the continent seeks to rebuild its economies severely impacted by COVID-19.
Meanwhile, the Africa Development Bank has launched a 600 million Australian dollar kangaroo social bond, which is equivalent to 463.9 million US dollars. According to a statement from the multilateral institution, the bond, which has a 5-year tenor in the first benchmark kangaroo since 2018 and the largest Australian dollar trade ever issued by the bank. The proceeds of the regional bank's social bonds are targeted at alleviating issues bordering on electricity access, water and sanitation, among others.
And oil prices rose today, with Brent gaining for a fourth consecutive session as the prospect of extra supply coming to the market soon from Iran faded, with talks dragging on over the United States rejoining a nuclear agreement with Tehran. Brent crude was up 43 cents at $73.29 a barrel after rising 0.2% yesterday. U.S. oil gained 41 cents to $71.29 a barrel, having slipped 3 cents in the previous session. Indirect discussions between the United States and Iran, along with other parties to the 2015 deal on Tehran's nuclear program, resumed on Saturday in Vienna and were described as intense by the European Union. A U.S. return to the deal will pave the way for the lifting of sanctions on Iran that would allow the OPEC member to resume exports of crude. OPEC plugs have been withholding output to support prices amid the pandemic.
All right. Our talks on the nuclear agreement once again will boost oil prices. We'll be having this conversation with Pelumi Olanubi, a research analyst at financial derivatives company. That's in a moment. Do stay with us. This is Business Morning.
You're welcome back. Well, talks on the nuclear agreement once again boost oil prices, and this should be good news for Nigeria. But is it really? Pelumi Olanubi, a research analyst with financial derivatives company, discusses oil prices and other burning economic issues with us. Good morning. Good morning, Pelumi.
Good morning.
Thank you for joining us.
Thanks for having me again.
Yeah, so once again, the talks with Tehran, the nuclear agreement, is bringing good news, I think.
Yeah.
Is it really good news for Nigeria?
Putting it in context, well, we'll get to know that in a moment. Actually, Brent price has increased. Like we all know, it's trading well above well above $70 per barrel. It's actually at 73 right now. And this is actually a good news, especially the fact that Nigeria, we are actually more sensitive to production than to price, because OPEC has actually eased production cuts, so we are producing more. And one of the major drivers for this is actually the growth prospect that we see in developing the economies generally. We've seen that US, for instance, the unemployment figures that came out last week showed that there was this decline in the numbers.
And the one in the UK too.
Yes, in the UK too, showing that more
yes.
sectors are opening up, more economic activities are actually happening, and also even in China. And this is pushing up demand for oil. And also the fact that, to a large extent, OPEC is actually still, there's still production cuts, although there is for us in Nigeria, where the issue right now is because we had actually for like 3 months, we did not comply with our production cut. We produced more than we expected, and because of that, OPEC has actually sanctioned Nigeria. So we are not producing as much as the production cut, the ease in production costs would have given us at about 1.5 million barrels per day. Now we are producing about 1.3 million barrels, and that will happen for May and this June, because we are trying to pay. We are being sanctioned and paying for. So that means that
but after June, we should be back to 1.5 million.
We should be back to actually. Should be back to.
But yesterday, our guests told us that demand for Nigerian oil is actually declining. What's going on?
Majorly, that is actually because our major exports countries, actually India and other. Majorly India, actually, they actually import about 40% of our crude oil. And we saw that, of course, the issue of the surge actually affected decline. Most of them, they have used up their inventory, and for now there's still minimal economic activities, and that is affecting our own demand.
So it's not like they don't want our oil.
So I'm also curious about these talks, the nuclear agreement talks. I mean, what if it goes through today? What if it goes through by weekend? Then...
I mean, that's actually a good news in the real sense, because it's going to allow more production, and there will be a sense of unity in the sense that, okay,
but there'll be more supply.
There'll be more supply.
There'll
be more supply to affect price. But as much as there'll be more supply, looking at it and going forward, we know that there is actually most of these companies and countries are actually divesting from crude oil to renewable energies and all that. So if because of that, coming years we're actually going to see more of supply shortage. Because there will still be demand for crude oil, for petrochemicals, for making plastics and the like. But at that point, because most of these huge companies are actually divesting, it will imply that there won't be enough supply to meet up with the demand, and that will also push up prices.
Yeah, because even the G7 that just ended on Sunday, clean energy was a major talk there. So that's a threat to Nigeria. Are we getting set for this?
It's actually a threat, and the good news is that as much as Nigeria is not isolated, we are in with what is going on, the current trade globally, and so because of that, we might not have seen significant changes or in direction, but because the conversation is ongoing, hoping that in coming years we would significantly also transition to new energy, to cleaner energy,
and the fact that are we hoping that it will just happen?
Let's just hope it actually happens, because I know the federal government actually said that Nigeria also we are going to transition into using electric vehicles and all that, and so for that, and we can see that solar energy, the use of solar energy even in Nigeria currently has increased compared to like 3, 4, 5 years ago. So with this information and this coming around, I believe that coming months, coming years, actually,
even though it's still very expensive, which is a discouraging factor.
Yes, especially at this time where everything is actually
liquidity is very tight.
Looking at this bullish run now in the oil market, how high do you expect it to go before it tapers down?
For now, actually, we don't expect it to be as high as $100, per barrel, but at least it will still stay between 69 to 75, say, in the coming months.
Because some say $120 per barrel would actually favor Nigeria.
Yes,
but you know, one of the things our guest said yesterday was the issue of Nigerians relaxing when the prices go up because the revenue has gone up. So the issue of diversification, the issue of looking at solid minerals and agriculture goes down when we feel that our income is up.
I was about to come to that. Everybody is happy now because we know that oil price is actually trading at above $70 per barrel, and this is about 85% above the $40 per barrel benchmark for the budget. So it means that we have more export earnings. But the snare which we should not, or the trap we should not fall into, is that for Nigeria to actually break even in the sense that our budget is able to, or external revenue is able to fund our budget and all the capital expenditure that the country needs to to be able to prepare the country to probably a 2-digit growth rate, is actually to trade oil at about $138. And if you look at the difference between that amount and what it is trading now, is actually huge. And this also emphasizes the need for diversification of our export base, because we know that just oil alone would not even suffice when it comes to government obligation, let alone infrastructural financing and what have you. So there is actual need, and we've been seeing conversations in this regard, and we've been seeing some major agricultural products. There have been activities towards increasing agricultural product to make Nigeria more competitive and of course boost.
Wouldn't this be a good time? I mean, with the excess, since it's above the benchmark, to channel some of these extras into infrastructural development, so that in the days of non-oil, we have the infrastructure to help the agriculture sector, to help the non-oil, to help the solid minerals, to help the services.
The time.
There is always a lag between. The first is the political will, and secondly, there's always a lag between the time of a reform and the impact of the reform. And what is important is, if a reform is not actually carried out at that particular time, the impact eventually might not be as expected or as forecasted. Now, like you rightly said, this is actually a very good time to take advantage of the declining global commodity prices and increase production. But we know that internally we have so many issues. Let me put it that way. First, and what I'll really stay on is the insecurity issues. If we want to boost our domestic production when it comes to agricultural product, it means that we have enough first to feed ourselves, and after that we can export to other countries. We know that Nigeria currently, what we produce is not enough to feed the whole nation. That is why one of the reasons why basic indicators for poverty is actually access to quality food, which we know that majority of the population are not just poor, but they are multidimensionally poor. I mean, they don't have access to not just good quality food, they don't have access to basic education, even sanitation, clean water, and what have you. So these issues are fundamental and actually there. So addressing just diverting and diversification and all that, those talks are good, but the impact first on people is very important.
Well, looking at the downers, I see our external reserve is still declining.
Yes.
At this point.
Yes, we saw that actually, and it's majorly because of CBN. They decided to increase their intervention in the market to boost forex supply, and we've seen that even in official window, and this has affected the price of, this has actually affected foreign reserves, as we have seen declined, and also the fact that there is still a backlog of portfolio investments that are still being settled. So all these are the factors pushing down external reserves.
Another burning issue is the issue of inflation. I mean, I think we're expecting it between today, tomorrow. Unfortunately, no more tweets to give us notification. But the FDC, you guys have predicted 18.2%. How did you arrive at that?
Yes, looking at inflation, of course, we saw that there was a slight decline in the inflation number in the month of April, but we don't expect that this decline should continue because the fundamentals are still the same. We still have the insecurity issues, like I mentioned earlier. In fact, if there's anything, it's becoming more heightened because it's not just in the north now, it's actually more pronounced in the southwest. And we believe, okay, the north and the middle belt is actually the major food basket, but even in the south, we produce some of our own crops too. But there's also threat to farmers, herders, clash, and all that. Aside that, the issue of money supply. You have seen money supply growth increase now to about 20% in April. So we have money supply is about 38 trillion naira now, and this is also fueling inflation. Also, the impact of exchange rate pass-through effect that we have seen on imported goods. I mean, Nigeria is actually an important country, how that we consume a lot of imported commodities. This too is actually fueling into inflation numbers. Aside that, also is the issue with logistics, transportation, and all that. We saw that, okay, there's possibility of fully deregulating the downstream sector. That will also increase the pump price. There's also the possibility of electricity tariff hike probably in July. All this also will also feed into inflation numbers. So we still expect, and looking at May, what happened in May, we still expect, looking at the indicators and all that, we still expect an increase in inflation rate.
All right, let's look at the currency market now. See that the naira appreciated in the parallel market to 498 naira. What's the driver there?
The major driver is because of increase in supply of foreign forex by through the official window. CBN has actually increased intervention, and with that, manufacturers that majorly import their raw materials, they can access more foreign exchange through the official window, and their blended rate, blended rates over the couple of months has been between 10 and 12%. Now they can increase it to 20% and source for the other 80% from the parallel market. So this will also push down pressure from the parallel market and drive down price.
What about the naira for dollar policy? It's still on.
It's still on, but the impact is not as significant, or we are not feeling it as much as we should, because of so many bureaucracy when it comes to the issue of forex. I mean, personally, if I want to get dollar, I wouldn't, even if I sell, I would want to go through the official window because of all the documentation and all that. And for remittances, for people, we have diasporas abroad sending in money and all that. Though, of course, is to incentivize customers to probably patronize this official window, but in the long run, people are not really.
So
and
you're
the fact
saying
that inflation, unemployment rate is just declining in all these major economies, which shows that even remittance inflow has not returned to pre-pandemic level. So all these are also factors
We
affecting.
see cocoa.
Yeah,
use,
cocoa production in Ondo State.
So that is actually one of the good
100.
news.
Yeah.
And
We
it's a new variant
yes,
too.
it's a new variant. Actually, this variant was actually developed by the Cocoa Research Institute here in Nigeria, and this particular variant has the capacity to produce 1 kilogram per tree, as against what we had before. And this particular seedling can mature in 2 years compared to 3 to 4 years. Currently, Nigeria produces about 250 to 300,000 tons, and this is relatively low compared to neighboring countries like Ivory Coast. I mean, they produce about 1.34 million tons, and even Ghana about 800,000 tons. Ours is still very low. But with this new variant that has capacity of producing about 100,000, although it's just in Ondo State for now,
yeah,
and we hope
I hope
that
they are duplicating,
so that
spreading
other
the
states
variant,
too,
yeah.
this can increase our production to maybe 400 to 500.
And then we can talk of the processing.
And also it will boost our export earnings. Yeah, I mean, during the lockdown, when everyone was just at home, the demand for hot chocolate was not did not decline as we saw in coffee, because coffee, people go out to take coffee and all that, but for hot chocolate you can just be
at
home. So the demand did not significantly decline. So for beverages and even chocolate and all that, so we expect that we take advantage of the processes.
I really pray we make the most of it.
These are opportunities that we can actually.
Well, that's a story for another day.
Yeah.
Thank you so much, Pelumi, for joining us this morning and sharing your thoughts with us.
Always good.
Well, we'll take a break now, and Business Morning will continue in just a moment.
Welcome back. You're still watching Business Morning live from Channels HQ. To our next conversation now, Highway Development and Management Initiative, HDMI, is to create an economic ecosystem around the National Highway Right-of-Way. It is anchored on private sector engagement in the management and development of the federal highways to open up opportunities across the economic subsectors that make up the highway economy. It's a project of the Federal Ministry of Works and Housing in collaboration with Infrastructure Concession Regulatory Commission, ICRC. Joining us now to make more sense of this is Ayobami Oyalowo, a political and development economist and lead economist and policy researcher, I&M Global One Voice. Joins us now to discuss the HDMI. Thank you so much for joining us on the program.
Thank you for having me. Good morning.
Good morning. So the HDMI seeks to facilitate the development of parts of Nigeria's 35,000-kilometer federal highway network. First, the first phase has 12 routes spread across the geopolitical zones. These 12 highways combined represent about 1,963 kilometers and 5.6% of Nigeria's 35,000-kilometer federal highway network. The bid was open in March. What level is it at now?
Well, the bid was opened, and I think the ceremony for the bid opening was done a few weeks ago, and that was when I started taking interest in it. It went successfully, and I think from the understanding I have, this is the first phase, is the pilot phase to test run this HDMI, which is the Highway Development and Management Initiative, in a way to bring in the private sector into management of our highways, so that the government can at least have some latitude in terms of road management and development. We all know that from the World Bank figures that we have, we will need about 35 trillion naira to catch up with our infrastructural deficit. And we know federal government don't have such money, state government don't have that kind of money. That is why it's a good idea that we are having this project to bring in private sector to play alongside the government in order to free some other fund in some other areas for some other form of development. So for me, that is a welcome development.
So who is qualified to participate as concessionaire, and what cover do they have against policy somersault?
Well, first and foremost, you must understand that we have the ICRC, that is the Infrastructure Concession, the Regulatory Commission. They are the ones who alongside the Federal Ministry of Works, developed this concept. So we were all living witnesses to what happened with the power sector project. We all saw how so many things were got wrong, and today we see how we're suffering for it. So I think in this instance, some of the lessons that were learned in power sector development and privatization must have been put in cognizance when this project was being developed, when this initiative was being developed. So I think when you look at the regulatory framework that has been put in place, when you look at some the level of work that have gone in, this is beyond what you can say one government will come in and everything will change in terms of policy somersault. So I am hoping that with the level of rigor that went into developing this concept, all the mistakes that were identified from what happened in the past have been put into correct perspective, and we shouldn't have any policy somersault in the nearest future.
All right, so one of the main objectives of this initiative is to attract expertise, but is this local or imported expertise we're talking about here?
Yeah, that is the good part in this project. It is all encompassing, both local and international. So while you might have maybe the big ones like the Julius Berger, the RCC and others, you also have the local ones. You have the Dantata and Sao. You have them doing the bigger ones. But you also need to understand that there's another executional structure such that we have the value-added concession. So this is where you begin to see room for our local and smaller players. Under the value-added concession, the entire right of way is concession for development of for development and management by the concessionaire. But there's another area called the unbundled asset approval. Under this, you find out that local people are given the right to play. Also, you can have hospitality management. You can have mechanic workshop. You can have farmers market, and a whole lot of value chain on this. So everybody was taken into cognizance when this was being developed. So both the local monies, international, everyone has a room to play. The bigger players are there, the smaller, the medium scale players are there, and the smaller ones too are also acceptable. So it's a complete value chain from one end to the other, so that you don't just have road development. You don't just have a road construction. You have a full concessioned road development and management, such that you don't just build the road and leave it to deteriorate over a few period of years, but the roads are completely managed for a longer period, and the concessionaires have the complete right to manage these roads and highways.
I think you might have to explain more of that, because in the mind of a lot of Nigerians, when we talk about highways, we talk about tolling, What are the other financing strategies? I know you said it's the full chain, you have the hospitality. If you explain to us, what the financial strategy is for this HDMI, apart from tolling, that is.
Okay, you apart from tolling, there are other strategies for financing. If you bring in your money, for instance, you can have the weighbridge, you have the advertising options, you have the directional signage and structure with advertising spaces. All these will be standardized for the first time, so that whatever you find in Sokoto is what you're going to find in Port Harcourt. You're not going to have different kind of signages. You have the rest area and other services that comes with it, motels, small clinics and what have you. You also have open spaces and parks, trailer parks. If you go to Lagos Ibadan Expressway, for instance, let's not use that. The Ibadan Ilorin Lagos-Ogbomosho expressway that has just been completed a few years ago, go check some portion of that road. They've been destroyed by trailers because they were parking right in the middle of the road. So these are some of the value added that you will be having as a concessionaire. You will have trailer parks that will be paid for. Then you have hospitality services. I once had an experience when I traveled from London to Scotland, and it's about 10 hours road journey. One thing I discovered was that no driver was allowed to drive more than 3 hours. So every driver drives from one point to another point. There is a rest area, he stops, another person takes over so that there is no fatigue. We've had people who will just jump on in a vehicle from Lagos. This guy will drive straight from Lagos to Kano. Fatigue sets in and nobody cares. So these are the things we are looking at. So with this, I think with the rest areas, you will have motels, you have hospitality areas and towing services, highway patrol and management, emergency services, refuse management. There are a lot of other things. So tolling should not be the first thing in our mind. And from what we even understand when the program was held, there's been no acceptable or agreed template for tolling right now. So tolling is even the least of the worries here. The concessionaires that bidded have all understood and they all have put in the areas where they think they can make their money back, not just about tolling.
Okay, I guess there are multiple areas to make revenue there. But on the other hand, what's the protection for Nigerians against exploitation? Because, you know, we know the private sector is in it for profit.
Of course, private sector is always going to be doing it for profit. But like I told you, it's a brainchild of not just the Federal Ministry of Works, it's also the ICRC, that's the Infrastructure Concession and Regulatory Commission, had a lot of input into the final project. So you will not have any form of exploitation. Whatever will be done must be acceptable and approved by the ICRC, and then it must be something that is worthy, that is acceptable to all, to Nigerians also. So I think from the regulatory framework and from the work that has been put in, there is no fear of exploitation at all for Nigerians.
And then for the concessionaire now, in the area of importing equipment, materials, so we don't have someone who starts a project and then there's an abandoned project. What's the plan to ease, their access to these things? We know now we're talking about FX and all that. They need equipment, they need materials. Is there a plan to make it easier for them to access these things?
While I cannot tell you yes or no, I remember that when we had the COVID pandemic, the federal government gave concession to importers of health consumables. I'm very sure that the work that has been put into this HDMI development, I am very, very certain that there will be some form of concession for equipment and some form of a tax break. You remember also, if you remember the Sukuk and the Dangote road that he did in Lagos, we all remember that it was for a tax break. So I don't think the government is unaware of some of the challenges that you have mentioned. I assume, and I'm very, very positive that most of these have been put into place and the concessionaires have clearly seen these areas and they have discussed it with the Federal Ministry of Works and Housing, and I don't think there's a challenge, there's any kind of challenge that has not been surmounted or dealt with in the final page. It's about 93 pages. You can actually go read it yourself. A lot of these works have been put in place. Every area was tackled, and I don't think Nigerians have anything to fear at all.
All right, so in dealing with the right of way, who takes care of properties involved? Because issues of property ownership and settlement have in some cases frustrated similar projects.
I think the federal government, since they are federal roads, the federal government naturally should take care of right of way while construction will be going on. If there will be need for expansion and encroaching into places that people thought were theirs, I'm sure if you check the development template that we've had, every road that is federal road, designated as a federal road, there is a limit to which setback that you have been given. If you do not encroach on that setback, there will be no challenge. But if you encroach on the setback, then it is likely going to be your loss, except there are some mistakes here and there, which I believe the federal government should handle without any much ado. It has nothing to do with the concessionaires.
All right, we'll have to leave it there now. Thank you so much for giving us your time on Business Morning. Mr. Ayobami Oyalo was the political and development economist at INM Global One Voice. Thank you so much for being on Business Morning.
Thank you for having me. Good morning.
Good morning. All right, now to the market. And yet the markets were closed yesterday, but even before yesterday, especially the fixed income market has been quite quiet.
Good morning, Ladi. You're correct to say that the fixed income market has been, as a matter of fact, a report has it that it's been down by more than 30% month on month in the month of April. But it looks as if investors are switching from the equities, from the fixed income market to equities market. So, but although the financial markets were closed on Monday in observance of the Democracy Day holiday declared by the federal government. So what I'm just going to give you is just a recap of what happened last week. We were up by 1.1%. And we gained more than 200 billion naira. So far, we've gained about 2% month to date, but then year to date, we've moderated the losses to about 2.8%. Of course, when you take a look at the sectoral performance, it was driven by all of the four major counters. Banking sector, the industrial goods sector, which was the major rallying point there. Of course, you know the reason why. Dangote Cement, which is there. And then the insurance sector was down more than 4%. But for the start of the trading week in the third week of June, to bring us and give us an update on how the market is moving right now, let's speak with Abdurrashid Momo, who is a trader at TRW Stockbrokers. Good morning, Abdurrashid.
Good morning.
I'm sure. Okay, I'm sure you had a nice holiday. You had some rest. So, but it's time for trading. So, how is trading at the NGX?
Well, so far the NGX it's up. I see a lot of greens everywhere for now. Basically the last time we spoke, I said the market was consolidating and there were no signs of any new lows. We are having market trending within an up channel. So basically, even if we see any correction, the market still looks good towards the upside. Bear in mind that we are still expecting financials from in anticipation of the interim dividends. You can see volumes have been traded in stocks like Zenith, UBA, Access Bank, GTB. I think those are the next set of stocks investors will be looking at in terms of interim dividends. So far, so good. The market is still looking good.
Okay, so now with that being said, and we've maintained about a 2 consecutive week positive trend. So would you say we've returned to a bull run at the market, especially when you look at the month of May? We were in the red, I think, the previous month. So how do you describe the market?
Okay. The one thing is the truth that normally the market, actually we see their rally during this period. If you look at historical views of the market actually peaks in around June and May. And, I start seeing sell-offs, you understand? But for now, since last year until date, market seems to be holding on to a steady upward climb. I guess it's apart from it has to do with the money market. I know rates are going up now. It's about 8%. But basically, you see more inflows. The investors are still comfortable that they are going to get higher returns in the stock market. And if you look at the market from, let's say, using technicals, I've drawn 2 lines, and I don't see any threat to the bull trend for now. The market is moving up because it is staircase formation, the market goes up and gets to a landing, understand, before it gathers momentum again. All things being equally, from what I'm seeing, if everything is okay, my projection might be like we're getting to about 39,400 plus, possibly, for the next resistance levels. So far, so good. The market is looking great.
Okay, so thank you for bringing us up to speed with trading activities at the NGX, Abdurrashid. Okay, so that was Abdurrashid Momo, stockbroker at TRW Stockbrokers. So now let's flip over to the unlisted securities market. It was down. Both the NSI and the market cap were down by 3.50%. Of course, also the same thing for volume of transactions. It was lower, all of it. Then let's over to the fixed income market. The fixed income market was still very sentiment. This is, remind you, this is as at last week. So we were not just less amounts of transactions there. At the Treasury bills market. So, and this follows the demand for the long-dated OMO bills. And of course, the increase in liquidity at the interbank market as at last week. Of course, last week the CBN had offered about 91.27 billion naira worth of allotments of 5.06 billion for the 91-day, and then 10 billion naira for the 182 days, and as well as the 164.11 billion naira for the 364 days. So that's it. So that's it.
Thank you so much. Well, Abdurrashid said it's looking green right now, so we'll wait to see how the session ends today. Thank you so much for the update, Anete. All right, so we'll take another quick break now. When we come back, we'll do an opening call to London. This is Business Morning. You stay with us.
Welcome back. You're still watching Business Morning on Channels Television. Moving over to London now, Juliana is standing by. Good morning, Juliana, and thank you for joining us this morning. Well, the UK unemployment rate is down thanks to that, but company payrolls still 500,000 below pre-COVID levels despite surging in May. Does this still make it a good news?
It does. Good morning, Ini. I'm pretty much going to repeat what I said to you probably this time last month, which is the UK labour market is showing signs of recovery. The fact that there are still over 500,000 jobs that have been removed from the payroll is unfortunately one of the severe consequences of COVID-19. But, things are picking up. I think the Office of National Statistics has shown that it was the sectors and the demographic that bared the biggest brunt of the COVID losses that are leading the recovery. So these are young people, this is retail, this is hospitality, indoor hospitality opened last month, and we are starting to see an influx of jobs. In fact, if you speak to some restaurants, they can't find the staff. So this is good news. There is still going to be a long way, but 4.7% is historically low and not far off from when we were before the pandemic.
And Freedom Day is no longer June the 21st, but now July 19. Hospitality firms are saying the change in the date will cost the sector £400 million. Businesses are asking for more help. How are the markets reacting to this? Are they still anticipating like they did for June the 21st?
Yeah, well, it is unfortunate. There was lots of speculation over the weekend and yesterday, quite rightly, as predicted. Prime Minister Boris Johnson has pushed back the date for Freedom Day for at least 4 weeks. So there are concerns that what happens in those 4 weeks, we're never going to get to a case, well, we don't think we're ever going to get to a position where there are zero COVID death rates. So does the Prime Minister push it again on July the 19th? That's the fear from backbench MPs. But of course, the biggest cry has come from the hospitality sector, particularly wedding vendors, funeral operators and clubs. Particularly the Pub and Beer Association, they're the organisation that have released that figure of £400 million. That's just for 4 weeks. And they said the brunt could be a lot more because there are fears about this Delta variant. So it does seem as if it has been priced in, but nevertheless, there are still sectors and individuals that are going to be greatly burning because of this decision.
Yeah, well, it seems the world can't escape this COVID thing, yeah. But the first trade deal to be negotiated from scratch since the UK left the EU has been concluded with Australia. Any idea the items and the details of the trade deal?
Well, the headline is that it's a great post-Brexit trade deal. As you said, it's the first one to be done from scratch. UK, Australia, very, very close allies. Scott Morrison, the Australian Prime Minister, had dinner with Boris Johnson last night, and that's where they were said to kind of agreed in principle. This is mainly just to make sure that food and products that are exported and imported between both countries can do so with less hassle. It's only going to be adding 0.02% to British GDP over the next 15 years, but it's a strategic trade relationship, especially as Britain is trying to get more access to the Asia-Pacific area. Of course, there are concerns. I've been discussing them over the past couple of weeks, especially from farmers who are worried about this unfettered access into British supermarkets. Is it going to lower standards? Is it going to take away the attraction from Scottish and Welsh beef and lamb? It's something we'll just have to wait and see.
Yeah, we'll certainly wait and see. Thank you so much, Juliana, and enjoy the rest of your day. Well, let's take a peep into the crypto market now with Laddie Williams, and it's still all eyes on the US Fed of tomorrow. How is that expected to affect the crypto space?
Well, we know that crypto has been on the minds of many regulators in the world right now. So obviously, crypto will be one of the burning issues that will be discussed. But right now, the market is green. Bitcoin sitting pretty at $40,318 at 8 a.m. this morning, up about 3.38%. Generally, altcoins are also in the green, with Ethereum at $2,622. Then, interestingly, the Fear Greed Index, we have some improvement there, 38. Yesterday was around that 20 region, but now there is less fear in the market at this point, but there is still fear. But we need to look out for this, because this will aid you in knowing when to buy or exit. So the green part, is extreme greed, so you need to watch out for that. Market cap, $1.75 trillion right now in the total crypto market. Let's talk to Olumide Additional now, a financial market analyst. Hello, Olumide.
Yeah, hello, Laddie. Happy Tuesday.
Happy Tuesday, Olumide. Good morning. Well, I know personally you're not a fan of this current spike in Bitcoin. You don't believe the bull market is back on, but what are you thinking now?
Yeah, the market sentiment is just reacting on Elon Musk past tweets talking about the fact that Tesla will consider accepting Bitcoin based on some parameters, and he mentioned categorically that as long as miners go into renewables, then he is going for Tesla. But you see, the thing is that the market is getting saturated, and we could see that in spite of Bitcoin gaining $6,000 in a span of 2 days, we saw that many altcoins are just having lackluster performance. And that tells you that there are a lot of dark cloud building over. First of all, the most powerful bank official in England, that's the central bank governor, he mentioned the fact that these assets are not suitable for payments. And we see that data has shown that in the last 3 months, insurer inflows have reduced, despite the fact that MicroStrategy just completed a deal of $500 million through the debt market to purchase Bitcoin. But we're seeing that on the average, institutional investors are staying away from the crypto market, particularly altcoins. So I'm seeing the fact that any announcement made tomorrow by the all important Fed meeting talking about tapering or asset purchases might mean the bad sign for Bitcoin, because it means that the world's most powerful economy will tighten liquidity. And when liquidity is tightened, risky assets tend to tank. And let's face the fact that most of these assets lack fundamentals to survive the long term. So I see a rapture taking around the crypto market in the midterm. But how be to me, some leading investment banks are already considering adopting Bitcoin for their wealthy clients. So I think very few assets will survive. I think there'll be a strong price correction in the coming months, but when it will, I can't really see. It all depends on how the meeting stands out tomorrow.
Okay, but right now, how should traders position themselves to at least make profit, either way, up or down?
Good question. I think for me, the most important thing has always been don't get overexposed. Don't get overexposed. The market is very volatile. These assets are very erratic. Try and reduce take profits when necessary. Try and reduce your exposure. Don't get too exposed. Then always look for strong fundamentals. Don't just invest in any asset based on social influence recommendations, stuff like that. Talk to your financial advisor when going to this asset. Also, look at assets that have real case scenario. Assets like Ethereum, Cardano, Polkadot, these assets will stand the test of time. Bitcoin is the favorite among institutional investors, and the fact that it's the pioneer crypto asset and has a inflationary edge against the fiat currency, it's their favorites. But I think other new ones will span out, but we should expect different regulations there in the future.
All right, Olumide, thank you so much. Always great to talk to you. Thank you.
Yeah.
All right, and you heard it there. Exposure, reduction.
Yeah, reduce your exposure.
Yeah, I wonder how exposed you are, though. But
I'll keep that to myself. Well, that's it on Business Morning for today. Thank you so much for watching. At 1:30 p.m. on Business Incorporated, we'll bring you updates from the world of business. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.